Well, welcome into Making Sense, or in the past couple of months, you probably wondered, I'm not even making sense. I usually want to make dollars. Now it's even tough to make a few cents. So today we have with us Brandt McDonald, McDonald Hagen Wealth Management. Good to see you again, young man.
Yes, you too.
even though we're a little distance apart.
Yeah, crazy times.
We get to yell at each other like
That's
this.
That's right.
But it makes it nice. But Brandt, obviously, our audience are people a little bit older, and they've probably, and I know in my life, I'm 77 years old, I've never seen anything like this happen.
No.
And I guess a lot of folks haven't seen a lot of this happen. And what's the, COVID-19 hit, and we think about health, what did it do financially?
Yeah, it's been quite a challenge, no doubt about it. I've been managing money 31 years, Jack.
Wow.
And this is the first for me.
Yeah.
You go back through all these different
Yes.
sort of myriad of crises that we've had to deal with, and these were all sort of man-made sort of things that came out of nowhere.
Mm-hmm.
This is one of those situations where I think, Warren Buffett said it best. He said, in the financial crisis, the train just came off the tracks.
Right.
In this crisis, they just went and took the train off the track and put it over into the off to the side.
Mm-hmm.
And so very interesting, purposefully shutting down our economy because of this really crazy virus situation.
Mm-hmm.
So yes, it's been challenging. I would say when this first started, the one thing that we paid most attention to were the credit markets, and we saw a real meltdown going on there all over the world. That's why we saw the huge sudden sharp sell-off where we hit roughly around 18,000 or so on the Dow.
Right.
Most of the recovery that we've seen in the last many weeks has been as a result of, I think, the Fed, and the Fed has come to the rescue. $6 trillion of fiscal and monetary stimulus, which is mind-blowing.
Amen.
Put that in perspective, we have a little over a $20 trillion economy. In the financial crisis, we did $4.5 trillion in QE, money creation, fiscal and monetary policy, but that was over a period of 3 to 3.5 years. This all happened in about 8 weeks.
Yeah, 2 months.
So pretty shocking. And I think it's safe to say that no one alive today has seen anything like this before unless they lived through the Great Depression. Unemployment probably around 25%. So risk management in terms of retirement plans has been the name of the game. And I always say, you have to understand what you own, know why you own it, and understand what part it plays in your portfolio. Because to your point, most people watching this show are retired or are getting close to retirement.
Right.
And so managing risk is absolutely critical, particularly as you start to use that account or your retirement sources to subsidize retirement income, because a sudden sharp drop in the value of those assets is hard to recover, especially when you're taking money out. So it's been an incredible challenge, but this is what we do. And I think, I would just give my best advice would be to really understand that this is not something that's going away anytime soon, in my opinion.
Right.
I don't think this is a V-shaped recovery scenario. I think it's more U-shaped. And I think that with that, it's going to be critical to really pay close attention to your account values and your asset allocation as we move through it.
They were saying, I heard this morning that one of the executives in the airline industry was talking about the fact it could be 35 years before the airline industry fully recovers.
Yeah.
Because you talk about a hit. I mean, not only a hit from loss of dollars, but when they move forward, what's going to be the new configuration?
Yeah.
Are you going to be in the middle seat and coach?
We're in a, yeah, exactly.
Yeah, that's right.
We're in a no man's land with this. There's no doubt that consumer behavior and social behavior will be forever changed as a result of this. And I think everyone is learning how to work remotely, that with all of these great new technologies and digital technologies, things like Zoom video, which we all have heard so much about, even FaceTime and other video types of video conferencing tools, that you can still get work done that way. corporations are not going to be so quick to want to put their executive management team or their underlying managers on airplanes to fly around the country for liability reasons.
Yeah, to go to meetings.
Yeah, that's right. So I think the airlines are probably in for a tough spot, tough ride. There's no question about it. But, you know, that's America. We're a free market capitalist sort of enterprise system.
Right.
We can adapt and change very quickly. And I think that's what we're beginning to see.
Well, it's a challenge. And we need to let our viewers know, if you go to a doctor, there's a lot of specialists out there right now. And of course, even in financial matters, you need a specialist to kind of look over the things you want to do. So we're going to invite Brandt to come back next week and the week after, because we're just delving a little bit into this thing. There's a lot more out there.
That's right.
And we'll be right back right after this.